Hello guys, this your boy is back here and welcome to another interesting episode. And guys, in today's episode, all right, in today's series, we are going to end our journey on fair value gap. Okay, so the imbalance in the market. Okay, we are going to look at how to build a strategy with fair value gaps. Okay, so now guys, what I would say is if you've not watched the part one, okay, of this video where we dived into understanding what fair value gap is and how to identify it in the charts, then I will recommend you to go and watch it, okay, because there is a lot of things in that package. Okay, go and watch the part one of that video. We will put it somewhere in the description or above here. All right, if you've watched that video and everything is clear, then you can continue with this video. Okay, so then I will ask you the question: if it is clear what fair value gap is, okay, then we can move on into building a strategy around it. So the question now becomes, how do we build a strategy around a fair value gap? Okay, the answer is very simple. It's the same way that you will build you will do it the same way, you will do it in the same way that you will build a strategy around any Forex strategy. Okay, all that you need is some confluence. Okay, you don't trade one concept alone, you don't base on one concept alone to make your trading decisions, but you attach it with some other techniques that is used in the Forex industry to make them as some sort of your confluence to give you more confidence for you to be able to enter into the market. Is it clear? Okay, guys, let me know with a like if it is clear. All right, if it is so, then let's go on the chat and let's see how we can critique some strategy around the fair value gap. All right, we'll be using a very simple Fibonacci around the fair value gap. You can also use supply and demand and candlestick patterns, but in this case we will use Fibonacci, which I think it's one of the simplest way to go around fair value gaps. Okay, so guys, let's look at some examples with fair value gap. All right, so in the previous video we talked about fair value gap being the space that is formed between the previous candle, which is this one, and the candle after the bigger candle. Okay, so this is the space that is formed between the two. All right, so now after we said that, we said also that in addition to that, we said that every time there is a fair value gap, okay, there is this imbalance in the market. The market most of the times tends to come back and fill that vacuum. Okay, then it reverses back into the direction that it wants to go to. Okay, now does the market always respect this? No. That is why you need to pawn in to yourself, or you need to add to your strategy some confluence, so that you can call the confluence like some checklist. All right, so when the market or the condition of the market meets all of those checklist, then that means you found, I'll call it the A+ setup. All right, I'll call it the A+ setup. That means you find the best setup. Does it happen that always the time the A+ setup, does the market respect them? No. Okay, but most of the times the A+ setups too, when they come out, they bring you, if the market does place it exactly as it is, it does bring you the profit that you expect. All right, it is quite good as a reward. Okay, so now we will pull out our Fibonacci. So the market is going down, so we will draw from the top down. Okay, good, and we will extend it. Okay, we will extend it here. Good. We will extend it to this second candle. Okay. Oh, come on. Good. All right, guys, it's okay. Let's put it. It's okay. So this is the second candle and this is the first candle. So you draw your Fibo from the top to the down of the second candle, all right? Then you ask yourself, we are looking for markets to reverse in the 60, between the 50-60 zone of Fibonacci, all right? More or less around that zone, okay? Then the moment it exits that zone, then we sell, okay? Good. So did we see the market returning back into that zone? Yes. You see, market went all the way down, then it returned back into that 50-61 Fibonacci zone, okay? 50-61 Fibonacci zone, then what happened? The market reversed down. You see? So at this point, you could have entered into the market, then put your stop loss here, okay? And your take profit would have been right down here at the zero of Fibonacci, or you can use the Fibonacci retracement, extended versions, okay, to get your profit, okay, if you wanted to go for more, okay? So this is, this could be a setup, all right? Now, I'm on the 1 hour doing this. So the moment the market gets into this zone, all right, you can drop down into the, let's say, 15 minutes time frame, okay? You can drop down into the 15 minutes time frame to see if you can get some good, you see? Candlestick confirmation, you see? So you got this candlestick, all right? It was even a straight one. It was all together. So, you could have just jumped into it, all right? Right when you see it coming out of this zone, or when it closed here, all right? You could have jumped right into it and put, in this case, I would have suggested that you will add the Fibonacci extensions to it, all right? Because this candle was very big. Now, if we want to do a good thing, we will have to drop down to the 1 minute time frame, all right, to be able to critique this area very well, okay, the entry very well, okay. So this one could have been a profit, okay. Let's look at another one. Let's go back to the 1 hour time frame, okay, and let's look at this one too. This one probably wouldn't have been a good setup. So as we said, it should respect our Fibonacci 6150 zone, all right? Good. What happened? This is it. Market moved from here, okay, to the top, okay? And what happened? Market dropped all the way into the 61 Fibonacci zone. This is a good one too. The 61 Fibonacci zone. Then what happened? You see, market exit. So right in this area, you could have jumped in with a buy, all right? Because the market was going in the buy direction. So you could have jumped in with a buy, okay? Put your stop loss here, okay? And your take profit will be here. Or you go with the extended versions of Fibonacci, okay? Let's look at the last one, all right? This one definitely wouldn't have been a good setup, all right? Let's bring out Fibonacci. Let me see. Draw it from here to here. All right. Come on. Good. Okay, you see, so it came back into the 61 zone, okay? Then look at what happened. The market got here, okay? So it would have given you your profit if you were going for your profit, if you're going to take your profit here, all right? But then the problem would have been for the entry, you see, because it was a long week. You see, you don't want a long week. You see, that's why I'm saying that, when you are building your strategy, there are certain things that you need to filter, all right? So example, like in this case, you will have to refine the strategy. Example in this case is maybe you say that, okay, if whenever it gives me a long week, it is out. Are you with me? That is the idea. That's what we are doing. That's what I told you guys at the very beginning of this video. We are trying to build a strategy around it. Okay, so not everything we will see in our strategy will be okay for us. Are you getting me? And even if it ends up going into our direction, we as long as it didn't respect our requirements, we don't get mad about it. Are you with me? Okay. So here, if the candles were, quite good, we would have been able to take our profit up to here, you see. But then if we were extending it to go for the Fibonacci extensions, then my brother, it would have been a total loss. All right. Let's go back here and look for some last one. Okay. You mark it from the top to the lowest of that area. All right. Good. Now, do you see the market reversing back into the 61 zone? You see? Now, this time around, you see how small the wick is. That is what I'm talking about. You see? So that means we have a confluence. You see? The wick has to be small. It has to get into the Fibonacci zone. All right? Then the moment it closes, maybe with a candlestick pattern, you can add a candlestick formation pattern to it, whether a variation engulfing or a doji. Okay, so after the doji, wait for the next candle to see whatever it is. So that's why I'm saying that you have to critique a strategy around it. All right, you have to find something, some confirmations. And with confluence, I always say that the more your confluence is, the better it is. Don't over exaggerate. All right, 3, 4 confluence is okay. All right, good. So you see, in this case, you would have jumped into the market, let's say around here, put your stop loss here and your take profit. You see, you would have gotten your take profit. Nice and easy peasy. If you wanted, you could have gone more, but then you would have to use the Fibonacci extensions. All right, guys, I hope and I believe that this video has been able to help you in understanding how to build a strategy around fair value gaps. All right. So like we were saying again, you could have used, let's pick this last one here as a case study before I close the video. All right. Just to let you know that there are different ways you could have built a strategy around this Fibonacci thing. Let me use this last two. Okay. So let's say we were using supply and demands. Okay. So look, you see that the market played around on this line here, 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 here. You see? So this is a zone. This is an area. This is a resistance. Okay. So the moment the market returns back into that resistance zone, I would have preferred a supply and demand zone instead of maybe a resistant line like that. You understand me? But anyway, this is MT4 and it is what it is. All right. So guys, what you could have done is, you could have used your supply, you could have get your rectangle and draw maybe your supply zone. All right. Now I will do it with these two lines. All right. You would have draw your supply zones. Okay. And look, you have said something that like, if the market reverses back in the zone, all right, in the zone where there was a lot of touches, then what will you do? You will sell. All right, good. So you see, we are applying supply and demand to it. Okay, so in this case, we got a supply. All right, now what about this zone 2? Okay, what you could have said is, let's use these same lines. All right, move this one here. You see, this zone here, market came around this area. I would have moved it a little bit up here for it to touch this one, and I would extend it. Let me extend it a little bit. Let me extend it a little bit. Good. All right. Okay, put it on the body, because that's what you do with your resistance and support line. Then the supply zone, at least that's what I do. All right, let me say it in that way, because everybody have their way of doing it. So this will be my supply. This will be, in this case, this will be my demand zone. All right, this will be my demand zone. Okay, so if you have the triangle, you pull your triangle and you draw it from these areas where market was playing around, and the zone would have been all of this place. All right, good. You can decide how big you want to make your zone, all right, depending on the time frame that you'll be trading inside, or you'll be finding the value gap, fair value gaps inside. All right, so bear in mind the fair value gaps, you can find it on any time frame. All right, so I would have, at this point, you see the market came here and reversed back into the zone. So at this point, I would have probably looked for a candlestick patterns, add a candlestick pattern to it, then I would have what, buy where, back to that same area and take my profit there. All right, good. What else? I think that's all for the video. I don't want to make this video too long. All right, but I hope guys, the idea around building a strategy behind whatever strategy that you want to build in the forex industry, I hope it is clear. This time around we did it for the fair value gaps. Okay, so it is the same logic. All right, you can build a different strategy around this. Okay, you can build a totally different strategy around it. All that you have to do is to use the techniques that we have in the trading industry and just build it around it. You understand me? Maybe you can even add banks level to it and all those kind of things. Do you understand me? The banks level, which is the 0, the 250, and the 500s, and the list goes on. All right. So guys, I'll leave you with this video. I hope you did enjoy this whole 2 series of fair value gaps. Guys, let me know in the comment section if there's something that you didn't understand that much. Let me know and I will help you guys out. All right. If there is something extra that you want me to add to it, guys, let me also know in the comment section. Okay. If you too have something in mind that you want to add to it, feel free and add it in the comment section. It can be a help to me as well. Okay, guys, I thank you very much for your time. And guess what? I will see you in the next video. In case you need a forex strategy, forex robots, or a forex best indicator to help you with a strategy that comes along with it, guys, feel free to reach out to me on my Instagram. And guys, I will do my best to help you with whatever thing you need. Okay, so guys, thank you very much, and I'll see you in the next video. Peace.